Machine's not approved. Hello, Barry. My name is Paul Raftery, and I'm a director with Projects RH. And today I'm joined by Barry Watkins, a financial strategist and CEO with Clever Financial Solutions. Barry is considered a leader in his industry, and he's covered by an Australian credit licence. We are both located in Pitt Street, Sydney. At Projects RH, we work with companies, and particularly new companies, which have no track record in Australia. One of the many things we are asked is, how do I get a loan for myself or for my business? At his company's website, it says, Clever Financial Solutions. We know that getting a loan is daunting and a challenging experience, fraught with jargon, too many options, and people trying to sell you things you don't know you want or need. It is why we focus on you. Welcome, Barry.
Welcome, Paul.
Barry is a highly respected member of our network, and our clients remember him for his authenticity as well as his skill and knowledge. Barry, could you please give us a brief overview of what Clever Financial Solutions does?
Sure. I mean, we essentially try and people want to borrow money or obtain funds for a particular task in life, whether that be for their work or their personal. It could be buying a new car, it could be buying a house, it could be buying stock for their business, it could be any of those things. And we look at the circumstances around it, what their circumstances are, what they want the funding for, what's going to suit them best, and try and come up with a solution that fits with a product that fits. And then we help them walk through the process to get that finance in place and approved.
So, Barry, I'm being told that people have credit scores and there's a credit profile, and this applies both for people and companies. How does it work?
So everyone has a credit score, whether you're a company or a person or an individual. It's a numerical value from 0 to 1200. 0 being the low risky side, 1200 being the great, we love you, trust you side. Generally from 0 to 500 is the poor credit score. Excellent is from 800 to 1200 is sort of where the excellent goes. If you're in the poor credit score and you're applying for credit, a lender may charge you a higher interest rate, or they may just flat out refuse you because they don't like you and judge you as too risky. Or if you're in the excellent, your chances of getting approved are much, much, much better.
My experience, Barry, is that major banks don't want to give loans to companies that haven't traded for at least 12 months. And they also then start demanding guarantees from directors which are backed by real property. Are there any ways of getting around that?
Not easily, no. They tend to, because they see you as a much higher risk, they tend to want to have all those guarantees in place as a fallback. So a lot of them do want the personal guarantees, or they want real property as a security behind it. There are some in Australia, some small business funding where it's half guaranteed by the government now. So that is a possibility. The interest rates tend to be a bit higher, but it's a traditional thing of you pay for the risk profile. So the higher the risk, the higher you pay.
Barry, who does the credit scoring, and can you appeal from that?
You can, yes. There are a number of credit agencies in Australia. The main one, or the biggest one, I guess, is Equifax. They used to be called Vader. They've been bought out now. They're probably the biggest that's there. You're eligible for a free credit score, a free credit report. So once a year, you can get your credit report for free. Otherwise, you generally have to pay for it. And you can actually check what's on your credit report, and if there's something on there you think isn't right, you can appeal either back to the financier who lodged it there, or back to Veda or Equifax or whoever the credit reporting agency is, and try and have that changed or removed.
So is it a wise policy to only borrow when you need it? I mean, I was brought up in a home where you only borrowed to get a house or perhaps a car. You didn't have other credit. If I'm new to the country or have a new business, is it smart to have some credit now, early?
It is. It helps build your credit profile. So even if you were to get a small credit card, say a $2,000 or a $5,000 limit credit card, that helps build your credit profile, because at least you're known to the credit agency. With things like credit cards, they actually report every month your payment profile back to the credit agencies. So when you do a credit report on yourself or for somebody, it'll come up and it will show that credit card is there, but it'll also show your repayment history on that, whether you paid it on time, whether you were late, and that also applies with other business loans and home loans as well.
Okay, so does a business have a small business have the same credit score as its directors or owners, or is it independent?
If it's a business, so if it's a sole trader, then it's based on the director's credit score, because obviously they're the sole trader. If it's a business or a trust or something like that, it has its own credit score. As long as it's registered with ASIC, it can have its own credit score, and therefore the business can have a different credit score to what the directors have.
Okay. So how do people improve their credit score, Barry?
Well, I mean, some of the parts are obvious. Pay your bills on time. Now that they track repayments of things, they can see when things are being paid late. So paying your credit cards on time, paying your loans on time, but it also includes paying your utilities bills, electricity, gas, mobile. They can also report if they haven't been paid on time to affect your credit score. Don't make too many inquiries. So if you go and apply for a credit card or a loan, some people will go and apply for, they're not sure if they're going to get this one, so they'll apply at 2 or 3 different banks or whatever. That'll affect your credit score, because each inquiry you do for a loan or for finance appears on the credit score, and that lowers your score down. The more inquiries you have, the worse it gets. You can also, if you have, the credit score can get affected by the amount of credit you have. So if you have a lot of credit, that can affect your score. So if you've got a big credit card and you don't really need that sort of limit, lower it down. That'll help your credit score. And other things that can affect it is the duration of time you've spent in your own, so where you live. So your residential history and your work history can also affect your credit score.
I find it really interesting you're saying if I've got excess credit, I should sort of reduce it. One of the things I, as a business person, would have thought it's nice to have a standby facility. And that clearly comes into the consideration. So does this consideration include overdrafts that are undrawn?
It does, but I tend to agree with that as well, that having a facility you can draw on for those times of needs is definitely a must. I try to do that myself and have a spare bit somewhere. So if you need it in times, it's there. But I guess if you've got a few of those facilities and you don't really need all of them open or all of them for the amount you've got, then perhaps reduce 1 or 2 down, make it a bit smaller so you don't have as much open credit sitting there.
Barry, one of the things that's really struck me about COVID-19 has been that we all got a lump in our cash flow not happening. And so that all affected many businesses' ability to pay bills on time. And there was a ripple effect through the industry. Are the credit rating agencies taking any notice of this in how they're reviewing, or are they strictly applying mathematical formula?
It's generally up to the actual finance lenders. So during at least the initial period of COVID, where the banks were giving repayment pauses and things to people, they were not reporting that to the credit agencies. So it just looked as if your repayments were normal. There was no black marks against your name on your credit report. Now, whether they're going to keep doing that past a certain period of time is unknown, but it's really up to the financier and what they run and report to the credit agency as to what your credit report's going to look like.
So all financiers don't ask the same questions and therefore get different reports?
No, so the financiers send their data to the credit reporting agency, and they collate it together. So
okay, so if the bank doesn't send the data, it's not there.
Yeah, or if they send the data to say the repayments are as normal, then that's what will show up on there. And that's what initially was happening with COVID, is the banks all agreed that no, we won't show that you've got any. Even if you're putting on payment pause, we're not going to show that. We're just going to show that it's as normal.
Barry, you know, we deal with a number of people who come to Australia to establish businesses. If I arrive at, say, 35 in Australia with no history, how do I start to create a history, or what do I need to do to be able to go and borrow to buy a home? I mean, I've been successful in my own country. I'm come here, I've got a job, or I've set up a business. How do I replace the fact I don't have a credit history?
You can't replace it, but I mean, generally you start off, you don't start off at zero. So the first thing you would apply for, you know, if you applied for a little credit card and you got that, then that would give you an inquiry or not a mark. What am I trying to think of? It would lodge onto your credit report, so it would appear there. And that would be obviously your starter building up, and then each credit facility you take out or apply for after that builds upon that. But you don't start at zero. So generally, if you're starting, I mean, you think if you're an 18-year-old and you're going to borrow money for the first time, even if you've lived in Australia all your life, it's effectively the same. You don't start at zero. It's just getting that first one is the harder one. But if it's only a smaller amount where the level of risk is a lot less, then the chances of getting that approved are much easier.
Barry, thank you for your insight into this important part of commercial life and for your time today.
You're welcome, Paul. Thank you very much for the opportunity.
My name is Paul Raftery, and I'm a director with Projects RH based in Sydney. And today I've been with Barry Watkins, CEO of Clever Finance Solutions, also based in Sydney. Ladies and gentlemen, goodbye for now.
Goodbye.